let's just take a look at some of the flows that we're seeing between equities and bonds. We've got, last week we saw foreigners, net sellers of equities, selling 300 million rand in equities and buying 1.58 billion rand in bonds. And overall, year to date, we've seen 66.8 billion rand flowing into the bond market, and we've seen foreigners, net sellers of equities. What do you make of the fact that it continues to be bonds which are the preferred asset class in South Africa?
Well, I think the simple answer there is that it's the carry trade. As soon as we see a bit of risk on evolving out of Europe and the States, you see the JP Morgan MB Plus spread popping up, you see our bonds diving down, prices going up, and you see capital flowing in. So the flows we had over the year to date on the bond side has been very significant. The equity side has been flat. It's been very little, which is quite interesting if you look at the way that the equity market has behaved. We hit another high today. It's not to say that the equities are expensive, but the point is that we are seeing good movements in the equity market. And it's supporting the rand, of course, especially in these volatile times. It's quite nice to get a bit of bond support. The problem, though, is as soon as you see risk off, you see outflows and you see the rand weakening.
Yeah, but at this point in time, it seems that the risk environment continues to be favouring stocks and riskier assets right now. Are you buying into the optimism that we've seen as a result of last week's non-farm payrolls jobs number?
Yeah, I think the job numbers over the past couple of months has been very disappointing. There's a lot of technical factors obviously feeding into it, and it was a bit of a surprise. The jobs number popping up to this extent on Friday. We expected going forward over the next 2-3 months to improve a little bit more. So yeah, and if we link that to other factors in the States, like the broader housing market, although you had a little bit of a blip over the past week in terms of numbers, the housing market is slowly but surely improving. So I think you'll get a bit more consumer confidence flowing into the market, which is good for business, and the businesses start employing a little bit more.
Of course, we've talked about the bond market, and we've seen a strong correlation between bonds and then property stocks. Resilient was one of the top gainers today. We saw property stocks across the board rallying on Friday. Do you have any exposure to property stocks? So what are your thoughts on the direction of property stocks after this, fantastic year that they've had this year?
Yeah, if it was just 1 year, it's a fantastic 7-8 years.
Yeah.
I think the current level yield on the property market makes it a little bit expensive, in line with bonds, which we think is expensive. But I think as long as you see this extremely aggressive buying of yield, especially from the foreigners, it's linked to the carry trade. That they are looking for yield wherever they can get it. You're most probably going to see the property market sort of at these levels. So the guys are prepared to pay a premium, but the yields are not that attractive. I think it's getting a bit on the expensive side.
But that's, of course, Eugene, what you think, and it seems to be foreigners that continue to drive these stocks up. I mean,
guys, I've lost your sounding.
Manager at ORA Fund Managers. We take a look at the currencies now with me, and before we do that, let's take a look at today's top gainers and losers on the JSE. I'm joined now by John Cairns, currency strategist at RMB, as we take some insights into today's currency front. Eugene, we've actually heard from Mario Monti coming from Italy, saying that expressing his doubts in the euro now, and that lows of the investor confidence at a 5-month low. Are you actually raising your bets against the euro in the coming months?
Well, I mean, I certainly don't trade against the euro, but we at RMB, yes, we've taken a negative view on the euro for a while now. I've got to say, euro dollar's already traded quite low, so potential to go lower, no, I think probably still limited. Maybe a lower again, 120 this year, but our expectation we can end the year more or less at current levels, so 123, 124.
Now, I've seen that the protection to cover yourself over the short term, over 3 months and then over a year, has actually increased to the most bearish that we've seen since 2011 July. Why is the spot market trading so differently on the euro to that short and long term market?
Well, no, there's certainly a lot of negativity to the euro, and for fairly obvious reasons. And as you say, you've seen speculators go very short euro-dollar, record positions against it. And I think that's just one reason why we shouldn't get too negative against the euro. The market's already discounted a lot. Market knows the problems in Europe, and the market is already incredibly short. So there is some limits on euro-dollar downside, but from our perspective, it's still vitally important for dollar rand. If euro-dollar goes down below 120, if it goes to 115, 110, it's certainly going to put upside pressure on dollar rand. In other words, a weaker rand.
Now, we have actually seen the rand quite weak compared to other emerging market currencies that has performed quite strongly now with the risk on again. Which of those currencies are the main performance, and why aren't the rand keeping up with them?
What you must remember, South Africa trades as a high yielding currency. Our strongest correlations with all the other currencies, both emerging markets and in the developed world, with high interest rates. So as Eugene was talking about, it's risk on, risk off trade, it's the carry trade coming in, that's the dominant factor. So since June, what we've in fact found is that the rand has underperformed some of those other high yielding currencies, notably Aussie, Kiwi, and to a much more limited extent the Canadian dollar, Turkish lira, Hungarian forint. The only one that's been a lot worse than us, that we traditionally have strong correlations with, is the Brazilian real. Now, why the rand has been underperforming is not all that clear. I mean, as you were just discussing, we've had significant bond flows into South Africa. So 21 billion in June, another 13 billion in July. Really, really strong inflows. It's quite surprising then in that environment that the rand is actually underperforming. Not to say that it's weak, it's just that it hasn't strengthened as much as those other currencies have.
Now, this little bit of weakness that we see here is also probably a driver then for the equity market that we've seen perform so well. Are we seeing a lot of inflows into the equity market coming through our currency on these weaker days?
No, we're not seeing equity flows at all these days, and well, I mean it's in and out, but it's pretty much been net zero for the year to date. It's really the bond flows that's a big story. It's a big story since the start of the crisis. Emerging market bonds are in favour. 40 billion rand inflows in 2010, 40 billion rand inflows in 2011, over 60 billion rand inflows this year already. It's very, very strong. It's certainly pushing down our yields. It's really helping our yield curve move lower, despite still relatively high inflation in South Africa.
John, where do we see those flows coming? Are they coming onto the short side, or are they coming onto the long side from the foreign buyers?
It's probably more into the short end, but definitely across the curve. And what is interesting is, from what we can tell, this is certainly real money inflows. In other words, portfolio capital. It's not speculative money that's going to come in, wash out very quickly. Of course, if we did get major bouts of risk aversion, some of it will leave, but not significant amounts. And ultimately, we must be aware that at some stage capital can reverse. But for now, it's real money coming into South Africa, and it looks like this is a trend that can continue, with an important consequence of pushing our yields down lower than they would otherwise have been, and definitely supporting the rand. In our view at RMB, we don't think it's enough to really drive that rand significantly stronger. We're not thinking of a 5 handle on dollar rand, but certainly suggests to us that the rand will strengthen again, and does suggest to us that, like we've seen in the past few years, the rand will on average be overvalued in this post-crisis period. We've got such low yields, such low interest rates offshore.
A very beneficial area then for foreign investors to put their money. Now, just talking on that point, if we look at that inclusion into the government bond index later in the year, in October to be precise, do you think some of these flows that we have seen up until now has been in anticipation of that, what might happen when all the index funds buy our bonds?
Yes, I certainly do think so. Again, if we go back to the numbers, 40 billion inflows in 2010, 2011, and then a marked acceleration this year. So what can explain the acceleration? It's presumably the news that we're going to be included in the Citigroup World Government Bond Index. So yes, I think that is giving it an additional boost. I don't think we can expect the size of inflows that we've seen in the past few months to really continue, but why not another 40 billion rand each year for the next few years? We at RMB think that's quite possible.
Good news then there for our bond index. That was John Cairns, currency strategist at RMB. Back to you, Sam, and continue looking at the market updates.
Thanks so much, Mia. Well, it seems my mic is back up and running, and we've still got Eugene joining us from Cape Town. So let's try that again, Eugene. Let's talk about Able. We saw the stock slipping back today to around 37.20. It was down 2% on the day. What are your thoughts on that update that we got for quarter three? Because cash sales up 7%, the size of the loan is up by 24% to 12,200 or 420 rand, and then of course advances up by 27%. So what is it about Able that the market is a little bit concerned about?
So the sales numbers on for Able has been really good over the past year or so. They're selling very well. I think linking that to Capitec, it's going very well. The problem with Able is that if you grow your asset book, you need to hold larger amounts of capital, and obviously Able has been a very attractive dividend buy over the past couple of years. It's very high yielding dividend stock, and with this kind of growth on your book, obviously you need to channel profits into your capital, and you can't grow your dividend to the same pace as the market would like to. And obviously management would prefer the growth route. So yeah, Able is not capital short. They've got sufficient, but they will have to replenish, and will most probably going forward slowly, I won't say reduce dividend payout, but not growth at the same pace. So yeah, I don't see this results as negative. I think it's reasonable, but one's got to note the capital demand.
From a valuation perspective, sitting with a PE of 11.4, we've seen the stock, it's still sitting with around 23% return. It hit almost 34 rand at one stage this year, and then almost 40 rand, of course, on the top end. What are your thoughts on the valuation of Able at this point?
We look at Able at a rolled 1 year forward PE of around 8.5 times earnings, which is not too bad. I think it's reasonable. Price to book ratio is quite acceptable. So it's not cheap, but it's reasonable. I sort of like the stock for the dividend flavor that it adds. I like the cash flow that it generates.
Yeah. So there we go. That's buy, and as you say, that PE on a forward basis coming back from 11.7 to around 8. Let's shift focus to Richemont, because almost hit 50 rand today, of course, after that trading update. But it's a company that keeps delivering to shareholders. There doesn't seem to be much reason to not buy into the Richemont story. I mean, with 20 to 40% expected increase in first half earnings.
Yeah, it's actually quite a volatile share if you look at the price movement over the past couple of months. The market was really surprised with these numbers. And if you look at the numbers, it's the European story popping out here. It's the currency play. They are producing assets in euros and selling it in dollars. And if you look at the German economy versus the rest of Europe, this is what you see. It's a weak euro, and it's a very attractive position to be in if you export. And I think a lot of the good news in this number is currency driven. And the other driver, very interestingly enough, is that a lot of this is dollar driven, to some extent states driven, not really Asia as before. If you look at the numbers from Hong Kong over the past couple of weeks or months or so, the Hong Kong watch sales has not been very good. They've been growing but sort of mediocre. So we're seeing this number being popped up on the currency and on US sales in general. A lot of other good news as well though.
That, of course, sends a good signal around where the United States economy is. Let's quickly shift focus to the resources space, because Exxaro was one of the stocks today that was, sitting at the top of the top 40. Your thoughts on the coal sector as a whole? Coal of Africa has been one of the stocks that has been punished. There are also, company-specific aspects there which we need to take into account. But how much of a risk is it playing in the coal space right now?
Well, let's ignore the politics for now. I think it depends on who you're supplying to, what kind of margins you're running on your mines. If you look at Exxaro currently and you look at the NAV valuation, And you simply divide it into three pieces and say it's iron ore, it's mineral sands, and it's coal. The coal assets are actually trading at excessively low PEs. I would guess it's in anything between 2 and 3 times PE, maybe a little bit more. The coal market, however, has been demanding. I mean, coal prices has been coming down quite aggressively. Although Exxaro is a very efficient operator in that market, the company has done and delivered reasonably well, and that it is going to impact on earnings over the next half year or so due to the drawback in price. But a lot of the Exxaro production is also going onto the Eskom side, and there's long-term contracts, and the takeoff on Eskom is starting to accelerate, which is very good for the company. I think Exxaro most probably bounced up from the low. It's also driven by a company called Tronox, which is part of its NAV now, which had a little bit of bad news in the broader world market, but has bounced back very aggressively, and they're into a very aggressive share buyback. So this is really a share to watch. We've been focusing on it over the past couple of months, and I think it's still cheap.
So it's still undervalued. I mean, looking at a P of 7.69, you're saying that still undervalued, 170 Rand, an opportunity to get in?
Yeah, no, I think if you look at the forward P, let's say 6.7 times, there's a little bit of political risk on the coal side. I think there's been a lot of noise lately on strategic minerals. I think sense will prevail. We need capital to be invested in this area of the resources sector. There's lots of potential. We've got lots of coal. And I don't think it's an area in the resource sector where they should fiddle now. We should rather invest and create jobs.